I'd like to introduce our guest speaker for the day, Sven Erik Holmes. He is the Executive Vice Chair, Legal and Compliance for KPMG. He directs the Office of General Counsel, Government Affairs, Security, Communications, and the firm's ethics and compliance programs. He's also the counsel to the Board of Directors and a member of the Management Committee. From 1995 to 2005, he was appointed by President Clinton to be the U.S. Judge for the Northern District of Oklahoma and served as the Chief Judge from 2003 to 2005. In 2001 to 2005, he was a member of the Budget Committee for the Federal Judiciary and served as the Vice Chair in 2004 and 2005. He also has some experience in teaching. He taught constitutional law as an adjunct professor at the University of Tulsa. He's a previous partner of the law firm of William & Connolly in Washington, D.C., and he was also the staff director and general counsel to the Senate Select Committee on Intelligence from 87 to 89. For those who are interested in sports marketing, he was the vice president of the Baltimore Orioles from 89 to 93. He was also the administrative assistant to Governor David Boren of Oklahoma from 75 to 77. He has an AB from Harvard in 73, a JD from the University of Virginia of Law in 1990, and an LLM from the Georgetown University, the Law Center, in 1987. Ladies and gentlemen, our guest speaker. Thank you.
Thank you very much. Listen, I can't tell you how excited I am to be here. I know I'm heading back to Washington this evening, and I gather that a number of your classmates have already headed that way. So I understand the enthusiasm with which they are headed east at this point. I want to talk a little bit today, first of all, just to talk a little bit about the business environment and the economy, talk a little bit more about the state of the accounting profession, of which, as the Vice Chairman of KPMG, to talk about KPMG itself, and in particular, talk about ethics and compliance as a central part of any business strategy and how important that is as you're going forward in navigating in these difficult times. And then finally, and most importantly, I'd like to hear from all of you, get some dialogue going about questions that are on your mind, questions about business, questions about the economy, about the accounting profession, and in particular questions about ethical challenges and how those play a role in business today. The first thing I'd like to talk about is just briefly about the global economy. As you know, we live in an incredibly interacted world. All of those things that happen, whether in Europe, in Asia, in the United States, in South America, are all completely interconnected. You know, at KPMG, we operate in 144 different countries around the world, and we're dealing with the kinds of problems that people are facing in every part of the world, and we find that every one of those problems is entirely interrelated, both to countries as well as to institutions that we represent. The two major things that drive the world economy today, and probably will for some period of time, is the enormous debt overhang that every country faces, and certainly in the United States, as well as the enormous amount of unemployment. As you look across the debt overhang, we've got an enormous problem in trying to navigate our way around what we do to get out of the debt problems. What happens in other countries with respect to their debts has an immediate and significant impact on what happens in the United States. As we look about how we deal with these issues, take an example of Greece. In the Greece debt economy, what's happening right now is that the accounting firms are being asked to value what is the value of the Greek debt. What it means in terms of the value of the Greek debt is going to have a tremendous impact on the economies of individual countries who are holding Greek debt and the number of banks all around the world that hold Greek debt. If that's valued down to close to zero, the impact of that on the balance sheet will drive what the ratios are for each of those banks, which in turn will limit the amount of lending that they can make within their own countries, which in turn will make unemployment that's much more difficult to address. So you can see that even the simple acts of assessing assets when put on the world stage can have an immediate and very powerful impact on our ability to deal with our unemployment problems. And unemployment, the second part of it, How is it that we drive demand? How is it that we drive hiring? What is it that we can do across these economies? And you look and say that our unemployment rate today is worse than it has been in 30 years. Now, against these enormous challenges with respect to the debt and with respect to unemployment, you look across how are the solutions intended to be crafted. We are probably at one of the most toxic periods in our political environment that we have been since Reconstruction. If you look back on what is it that drives that toxic nature, the fear, the anger, the American electorate today, by virtue of the financial crisis, is looking to assign responsibility and accountability for the financial institutions, for the governments, for the political decision makers. How is it that we got to the place that we got to, and who's responsible for it? One of the questions that is truly presented and makes these things so much more challenging is our political system capable of dealing with the economic challenges that face us in terms of debt and unemployment? So all of these things necessarily require political solutions, even as the European Union undertakes to change the attitudes in Greece for purposes of assuming responsibility to run an appropriate government. At the same time, the political environment interferes with the ability to find how it is that we're going to make people responsible and make sure that we can move forward. Against this backdrop, businesses today face many challenges, most of which deal with how do you take costs out of the system. Even as the businesses that we work with at KPMG, and we deal with a number of boards and executives and audit committees. And across all of those different sort of business settings, regardless of the business, we have a fundamental focus. And that focus is, how do we reduce our costs? We're going to have to reduce the costs because until the demand picks up, we're not in a position as an organization to invest new capital. We're not in a position to go put people on or to make capital investments for infrastructure, because if we do that, we fear that when the time comes for those goods or services to actually be marketed, there'll be no market. And therefore, the only responsible thing, as ironic as it sounds, is to actually cut back on costs, to cut back on the people, and as a result, to basically ensure that this will be a long, painful drag, as opposed to contributing to a growth cycle where people would be hired, drive increased demand, and therefore drive economic expansion. In all of this is the role of government. Government plays a very central role. Certainly every effort has been made, or a number of different efforts, I won't say every effort, number of different efforts have been made. How do you use the government as a growth engine? How do we take the government and use government activity to stimulate demand, to stimulate growth? What can be done or should be done? Now, while that is going on, you've got at the same time is an enormous deal of skepticism about the effectiveness of government, and a great deal of the anger and frustration that exists within the public has to do with whether they believe that their tax dollars were spent effectively. And this has a tremendous downstream effect across the political environment. Because if you look out across how the system works, the government, the public, in its anger and frustration, is telling their elected representatives that they need to be much more focused and much more ferocious in how they deal with those who regulate the economy. Those elected officials, as the appropriators, in turn turn to the regulators and say, we don't want to be held accountable for not doing all that needs to be done. Therefore, as a result, we're telling you, the regulators, you must be far more ferocious in how you deal with the private sector. This is entirely separate from the question of whether there's a whole new sets of regulations, whether Dodd-Frank brings on all kinds of different complexities. This has to do entirely with a sense of attitude, because the regulatory environment in terms of the people that our clients deal with, as they interact with not just the Securities and Exchange Commission or the Internal Revenue Service or the CFTC, all of these different entities are feeling this pressure from the elected officials, who are in turn feeling the pressure from the electorate. And it is this downstream pressure that makes the regulatory environment much more challenging in an attitudinal sense, separate and apart from how much regulation is appropriate and whether or not people are being bogged down by the regulatory environment. Now, in all of these things, it is probably true that for purposes of public accounting, for purposes of KPMG and other accounting professionals, there are a lot of opportunities. As you look across the space, certainly the things that I'm responsible for, that is regulatory areas, risk areas, and compliance areas, all of these things present new and different opportunities as a result to those in public accounting. If you think of the government as an appropriator and as a regulator and as an enforcer, the government as an appropriator are talking about enormous flows of capital. Certainly with the stimulus package of $800 billion flowing down from the federal government through state governments and through local entities, enormous amount of money. But as an appropriator, it was absolutely critical that those monies be tracked and the control systems around them to ensure that there was an effective expenditures. These were all opportunities that presented themselves to KPMG and other public accounting firms to be participants in the processes to ensure that that appropriation process worked effectively. As a regulator, with Dodd-Frank as well as other things, the explosion of regulations in the market requires a whole new sets of systems for private sector entities. With the needs for systems, again, public accounting, the system controls that public accounting brings to that kind of, those kinds of issues, those are enormous opportunities in this new area as government grows and takes a more commanding role in our life. And then finally, as an enforcer, as I said, the enforcement environment is more ferocious today than it has ever been. And it's in that environment that there's enormous requirements for very effective compliance systems. Again, something that the public accounting firms have long been very expert at is developing compliance systems to ensure that there's a full meeting of all applicable standards. Risk as well, another area that I have responsibility for at KPMG, but risk today is probably the predominant thing that boards of directors are focused on. How do they bring in appropriate risk management systems? How do they assess their risk? How do they deal with it? And again, something that KPMG and other public accounting firms have focused on for some time is how do you deal with effective risk management? So there is most certainly in these areas, as well as other areas such as business planning or tax planning or areas that while there's a great deal of difficulty in the world today and a number of challenges that are faced both globally as well as with individual clients, there's a lot of opportunity to make these things work. And those are the things that, in fact, public accounting firms are best at. Now, at the same time, with all the opportunity, public accounting firms are facing enormous challenges. There are great questions that are currently being presented, and rightly so. A number of studies have been done. What is the value of the audit? Is the auditor make a contribution? Does it actually protect the capital markets? How do we know that the auditor is performing her or his function appropriately? These are all very serious questions that are now being presented as people look back on the economic crisis and they ask themselves, how could we have prevented this? Is there a role that the gatekeepers should have played and did not, or could have played had they had a different mandate? And as people look into that question, more frequently than not, the conclusion is that the auditors did not share responsibility for the fact that there was an economic crisis. But the fact that they do not share responsibility raises very significantly the question as to whether they're making a contribution that is appropriate, whether the job of auditor should in fact be broader in such a way that you could actually assist in the process of preventing an economic downturn. Should the scope of the audit be of a kind that it makes qualitative analysis around the business activities of individual organizations so that should there be trouble ahead, their responsibility is greater to see that trouble, to identify it, and to guard against downturns. Very legitimate questions. Certainly in Europe, they trace the root causes predominantly to forms of concentration in the marketplace, whether big four accounting firms, whether there should be more accounting firms with the capacity to do global work. Very legitimate questions around, are there adverse impacts from having so few firms developing or delivering those services? The United States, the PCAOB has a different look, not so much in market concentration, but the PCAOB, as the regulator of the audit profession in the United States, is focused fundamentally on auditor skepticism and objectivity. And that starts with the fundamental principle that auditors are in fact paid by the firms that they are expected to independently and objectively audit. And is there something about that relationship that so interferes with their ability to be effective and skeptical and independent that we need to change that dynamic? And I think we'll talk about that hopefully some more in the Q&A session, because that's a matter of enormous importance. I think as you look back as well, not just from the outside questions around what is the appropriate range of the audit, not just about questions about what can be done to ensure skepticism and objectivity, but what are the other kinds of issues that the profession faces? And I would submit that two in particular come to mind. One is the enormous impact that cost-cutting has in dealing with auditor fees. It is simply fundamental that at a certain point, there's an impact in the relationship to which fee reductions will change the quality of the service being delivered. How that pressure is addressed, as all organizations, quite rightly, all across the economy are expecting to get the exact same service except to pay for it less. It's no different. People want to rent the same property and pay less for it. People want to get the same legal service and pay less for it. People want to get the same product and pay less for it. There's no reason why the same impact wouldn't occur with respect to something such as audits. The only problem is at a certain point, the finite fee construct actually has a direct impact on the resources capable of doing objective work and giving appropriate information to the capital markets. And the second issue that faces the profession generally, and certainly more important than the first, and that is a question about the war for talent. We're in a very competitive situation in terms of how do we attract and retain the best possible talent. That's something from you all's standpoint, it's great, because you're going to be the object of that war for talent. That'll give you an enormous amount of choice. It'll give you an enormous amount of opportunities. From the standpoint of the profession, we're dealing with how do we keep people as talented as you are? How do we attract you to public accounting? How do you keep you in public accounting? How do we make it interesting enough as well as reach the right compensation levels? One of the things that has happened in time as a result of the last economic downturn is that across industry, people laid off a number of people as part of their cost-cutting measures. That was the fundamental mechanism by which people addressed the cost problems of the economic crisis. In the last year and a half, they're now going back to fill in the gaps of the people that were now created by the layoffs that they advanced in the years before that. The problem with that, from our standpoint, is the place that they look to primarily for purposes of filling those gaps are in fact public accounting firms, because the people that we have were enormously talented when we recruited them, but over the last period of years, we've been developing that talent, we've been giving them opportunity, they've been growing as professionals, expanding their skill sets, and so quite naturally, it's a perfect place to look for capable and effective talent, and that's the issue that we're facing, is trying to make sure that we can keep our talent as industry across the globe looks to us as a source of really talented individuals. So as you look across all of those things, and Dean Gallio talks about what's going to happen in the spring is maybe you'll figure out how to prevent this otherwise really optimistic and rosy picture of where we are. But I think that the first things that we really focus on is what do you do if you're an organization navigating in an environment such as this? What is it that people in management today think about, and how do they structure an organization that they believe will be an effective culture and an effective company? And it's interesting because as we look at that issue is almost divorced from the whole question of what the environment is. It's divorced from the question of whether or not the global economy is in extremis, or whether the unemployment issues are debilitating, or whether the debt questions interfere with how you do business, or whether the regulatory environment is too challenging. When you talk about from where we sit and think about management, we don't start at those problems. We don't start with, well, the first thing we need to do is we need to be able to address the problems occasioned by the regulatory environment. We will get to that problem, but it's not the first problem. We will get to the problems occasioned by debt or the cost of capital. We will get to those problems, but the first thing that we talk about and think about doing is how do we build our organization, the four corners of who we are, and then if we're confident that that organization is an effective organization, right people, well-trained, clear goals and perspectives, and most importantly, an organization of shared values, then we will go to the problems that we face externally. But I will tell you this, to be an effective executive, to be an effective organization, your starting point has to be internal. You have to believe that the ethics and values of your own organization, that the culture that you create is one that can then be of such high performance, of high value, that then it can begin to take on the problems that the external world presents. So I want to talk a little bit about how we approach that issue, because that's really the starting point. Not the problems working back, but who you are, how you work together as teams, what values you share, and then you take that as the resource that you lay against the problems that you go forward with. And what do we mean about a common set of values? To us, we'd always talked about the question of respect. Values, one that respects, every individual respects the people that she or he works with, respects the organization of which they're a part, and respects himself or herself for being a part of that organization. And I think under those circumstances, that's the kind of values that you undertake to develop inter se with your people, with your management teams, with the people that you will call members of, in our case, the KPMG family. So how do we deal with those issues? What did we do at KPMG as we looked across how we wanted to face into the marketplace? I came to KPMG in 2005. I came at the same time we had a new chairman, Tim Flynn, and a new deputy chairman, John Viemeyer, Notre Dame graduate. John is now, in fact, the chairman and CEO of KPMG, and myself as executive vice chairman. And we made it our first priority as we looked across what the challenges were, to put in place a model ethics and compliance program, to put in place things that we established that we would share values so that as we faced the external world, we would do so confidently that we all were on the same team with the same goals and with the same ethical view of the environment. So how do we do that? How do we look across that? And we had a completely different view than what was normally viewed as, well, you have a tone at the top. You say, well, if you have the right tone at the top, things will come from the top down. You'll create the organization that way. Our view is just the opposite. Our view is that if you want to build a sense of strong ethical culture, that is actually a bottom-up exercise. Top-down organizations fail in terms of how the communications run, the degree to which people are actually understanding the messages and believe and they are, in fact, part of their world. So we conducted a whole series of focus groups. I went across the entire country to 50-some offices, spend the morning talking with all of our youngest people, noon to middle of the afternoon with our managers, the 6-year to 10-year group, and then ultimately at the end of the day with the partners, but only at the end of the day. And our question's really twofold, meeting with all of our people. And that is, first of all, how do we instill in every individual a sense of personal responsibility for the ethical environment? And second of all, how do we communicate with you? If we send a message from leadership, the chairman or the deputy chairman, myself, send messages across the firm, how is it that we make sure that those are messages that you will understand, read, and accept? Now, on the latter point, it's a somewhat, I would say, humbling experience, because you talk to focus groups and you ask the question, okay, with respect to everyone in the room, 70 people at that time about on a focus group, everybody in the room, how many of you would delete without reading, an email sent to you directly by the chairman and CEO of KPMG? The answer is 50%. Always 50%. Now you say, my gosh, that seems awfully high. Well, when you think about the kinds of information that comes pouring through young professionals' email inboxes, and you think about the kind of time that they're put under for purposes of performing their responsibilities, that ultimately is not as surprising as it might be. Now, there's a great deal of trepidation on their part to admit that, in fact, a whole host of them wouldn't read the things without, wouldn't open it, wouldn't read it. A little bit of humbling on my part, since I've spent a lot of time with the chairman and deputy chairman fine-tuning these messages, absolutely convinced that if we hone it just one more time, it'll really be, everybody will just love it, only to find that half of them didn't read it at all. But I will tell you, in the end, we believed it was our responsibility as the communicator to shape our communications in a way that's relevant and effective more than it's the responsibility of the recipient. Because that is what the essence of communication is. That's what the essence of leadership is. If we can't send our messages in ways to our people that they will see them as relevant, that they will touch the world in which they live, and therefore they will respond accordingly, then we're failing as the communicators, not them. So we undertook a whole review of, okay, if sending out single shotgun messages is not the effective way, how do we communicate with our people? How do we move this notion of instilling in every individual a sense of personal responsibility for the ethical environment? And so based on that, we went back and we did what we called a touch points review. Where is it that we actually see our people? Where do we come in contact with them? Particularly in a place in which they're listening to what we're doing, they're focused, and we have an opportunity to convey what it is that we believe in and what values we seek to achieve. And so you go all the way back. We went back to on-campus interviewing. In fact, we changed the way in which we do on-campus interviewing, because historically an on-campus interview is, let's review this, let's see what the background of the interviewee is. But instead, we recognized that was the first opportunity to communicate to the interviewee who KPMG was, what we believed in, and what our expectation was, and what the responsibility of that person would be. If you join our organization, what your responsibility will be to the ethical environment of KPMG. Use that touch point as a very serious opportunity to talk about building a cultural environment of high ethical standards. Similarly, we have our internship program. People come, they join, they become interns before they join the firm. I speak to the interns. We put aside a great deal of time in the internship programs focused on the ethical environment of KPMG. How do we use that touch point when people are focused and we have their attention to talk about what values we would share? And what I always tell our interns is that you're now about to make the first professional decision of your professional life. That is where you're going to start your career. It's a career, it's a decision of enormous import, and one that you should approach very seriously, even if you believe that there's going to be places after that and places after that again. But whatever you do, approach that decision very seriously. And as part of that decision, ask yourself, is this going to be an organization or a place where I'm going to respect myself for being there, respect the organization, and respect the people I work with? Am I prepared to be in a place that has a high expectation for my responsibility to the ethical environment? Or is that something that I am not looking for in my job experience? Because I will promise you this, if you find yourself graduate, get into the workforce, if you find yourself in an organization where you can't say those things about respect, you will not be happy, and it will only be a matter of time before you move on. So those are the things that you need to be thinking about, and fundamentally, that's how important the question of the ethical environment is. We did the same thing as we went from the interns to the onboarding in orientation. We changed our orientation program in order to make sure that people coming on board right before and as they began, they also had a stronger sense of what the values were, what the shared expectations were around the ethical environment. And finally, we changed significantly the questions around technical training. Those of you who are in accounting, you know accountants are being trained all the time. There's regular continuing education responsibilities, and so we have a great deal of technical training. It is a time when people are fundamentally focused when the technical training, and therefore we changed our technical training with the express objective of building into that this sense of responsibility for the ethical environment, that we will not divorce the technical execution of your job responsibilities from your responsibilities as an employee, manager, partner for the ethical environment of the firm. So all of that was changed as well. So I think that it's important as we look at these things, how is it that we focus on ethics? Why is it that we do that? And I think at the end of the day, we're absolutely convinced that dealing with that in the environment in which we live, that you're not going to be able to effectively address the other questions. There's certainly challenges enough across the economy, across the political landscape, the regulatory world, challenges enough, but you cannot begin to address those unless your organization is coherent and around a fundamental set of values. I'll take just a couple of minutes as we look at, and just to sort of go back and talk to you about during my early months at KPMG, and the first opportunity as we dealt with the questions of doing the right thing, how important is a commitment to an ethical environment, and the value that that can have as you navigate in the business world. When I joined KPMG in 2005, KPMG was the object of a significant investigation by the Department of Justice as a result of tax shelter activities that had taken place actually in the late 1990s. There was a great deal of difficulty as a result of those investigations. The Wall Street Journal then printed a front-page story, made it clear that in fact KPMG was the subject of an investigation. And as a result, the significant question was presented, what will be the impact? How do you respond to something of this kind. How do you give confidence to your stakeholders? How do you deal with your clients? How do you deal with your people? All of those kinds of issues get presented, and they get presented regularly. Certainly issues not unrelated to this were presented recently at Penn State. Those are the kinds of things that you weigh a whole series of issues around. And I'll tell you what we did is that we immediately issued statements accepting full responsibility, notwithstanding the fact that these occurred upwards to 10 years before, but accept full responsibility for all that occurred, to make it absolutely clear through outreach to our clients and to our people that what happened was absolutely wrong, that there was no basis for it, no apologies, there was no justification for it. And as a result, we were able to go forward. And if you look back and you talk to our clients and to our people, as a result of how we dealt with those issues and we came out of those issues. From the standpoint of our clients, one, we never lost a client as a result of the challenges around dealing with tax shelters. And in fact, a number of clients said quite specifically that their respect for KPMG increased as a result of the incident, because it is not often that people know exactly how an organization will respond when it's under pressure, when it is being faced with significant moral and ethical questions. Will it do the right thing? And numerous clients reported that their respect went up because they recognized that under those kinds of circumstances, there was a keen sense of keeping a strong hold on the firm's ethical compass and taking full responsibility for what occurred. In the same way, with our people, you look across our individual people, we had enormous concern. Would people leave the firm? What would happen? And at the end of the resolution of that matter in August of 2005, and we keep regular spot polling of our people, we had 23,000 people, and those spot polling showed that the number of the thing that I follow the most, which is the question, I'm proud to say I work at KPMG. Now, interestingly, one would think that after making a public settlement with the Department of Justice, admitting wrongdoing, dealing with past activities, that people would believe that the number should go down in the face of that. But the fact is, because we were completely forthright about it, because the ethical calculus was made absolutely clear, the choices that we made and the values that we projected were unmistakable and put out for the world to see, notwithstanding the risks that associated with it, that as a result, our people believed that they were prouder as a result to say they worked with KPMG than they had been before, and that number actually went up. So I guess what I'm really conveying here is that there are very serious real-life applications of when organizations and individuals will be confronted with very serious moral and ethical questions that will go to the very heart of who you are as an organization, and in turn, as a member of that organization, who you are as an individual. And how you approach those, and having the ability as an organization to approach them coherently with a shared set of values, with a keen sense of what the ethical compass should be, actually has an enormous positive impact on your standing in the business community, and should not in any way be thought of as separate and apart from the other business challenges that the organization faces, but instead the most effective way to deal with those challenges. So I recognize we've talked about the number of difficulties that exist certainly in the market. It exists with the economy, it exists with the political system. We've talked about the issues in facing us with respect to how to focus on the ethics and values of an organization, I think at the end, I will say this, notwithstanding all of those challenges, all of those difficulties, I am very optimistic. I'm optimistic in large part because one of the things that I enjoy most about my job is I get to go spend time on various campuses like Notre Dame, meet with students to talk about problems that they face and issues that are in front of them. And every time I leave a campus, and I'm quite sure it'll be the same today, I come away with a renewed sense of optimism that these problems can be addressed, they can be solved, and people of your skills and commitment and values will be very successful in dealing with them. So with that, thank you very much. All right, shall we sit? All right.
Open it up for questions and answers.
All right. Can you hear me okay on this mic? Got it? All right, good. We're going out here, all right. Kind of liked it back there. That was
Question? Yeah, if you go to the microphone, please.
Can you hear me? Yep. This question kind of bridges the first part of your discussion with the latter part. You spoke a lot about the stimulus package and the various injections of cash into the market to try to fix or help fix the economy. And you mentioned that this provided a lot of opportunities for KPMG and the rest of the Big Four because, I mean, considering how much money there was going on, there had to be a lot of accounting going on.
Right.
Given the massive amount of fraud that was seen with the stimulus package, you know, money going to various non-existent districts, for instance, I'm curious how much the government actually used KPMG and the rest of the Big Four, because there are various other ethical implications to that. So that's where the two questions were.
When the stimulus package was crafted, one of the first big questions was how much of the package of funds that would be flowing through the system could be set aside for what they called administrative costs. Because as you recall, the goal was for jobs created or saved. Largest share of it was saved jobs, that is money that went into state and local governments and merely kept people on payrolls that might otherwise have dropped off the payrolls. And then the rest of the money was money that flowed from, they say, federal governments, state governments to local governments. There was a good deal of that administrative money used to track those funds. I suspect that given the price tags, there was actually a lot less fraud, as we would understand fraud to be, than there might have been otherwise. I think that there is a distinction between what we would call fraud, that is, people who did nothing and received funds, from what might be considered to be bad choices. Those things that got a great deal of publicity would surround, I guess there were mimes in Florida that received stimulus money. There were those who thought mimes in Florida were not a perfect investment of funds. But there was nothing fraudulent about it. The theory was that, in fact, they would otherwise be unemployed mimes. But that is different than somebody who there was absolutely no relationship between the expenditure of the money and a job saved or not. But certainly from KPMG's standpoint, as well as across other firms, there was a great deal of work done to try to minimize the amount of fraud that attended that. I mean, and you think about it, this was, our position was, what I referred to it when I was meeting with the OMB people, and is that running $800 billion from the federal governments through the states and the municipalities was like running the Colorado River down the Potomac. I mean, the capacity to actually deal with those kinds of monies at some of the smaller municipal levels, they simply didn't have the systems in place that could have actually responsibly, cataloged it, made sure that it went to the right places, and then reported it. So a lot more was done than looks like, but if you think of it in terms of that magnitude, it probably prevented an enormous amount of fraud, in my view.
Thank you very much.
Yeah. Yes.
Hi. I actually did a busy season audit internship earlier this year, and this is going back to what you talked about first is, one question that was on everybody's mind is how do we add value while we're here? And if the auditor did take on a broader responsibility set of, qualitatively analyzing the financial statements and what the company's doing and seeing if they can prevent any kind of economic downturn situation, would that put the auditor in a consulting position and then therefore compromise independence? Like, just because of that, do you think the auditor could ever have broader responsibilities?
I think that's a very good point. I think that how far you go along the continuum of qualitative assessments does reach a tipping point where it is no longer merely additive to the audit, but in fact is new original work that of a kind could be not independent. I think that what the regulators would say is there some way to, at least in an objective way, to talk about what were the range of choices that were made, and was that range ranging from the more aggressive to the less aggressive? Is there some way to say where on that continuum this organization continuously makes choices? So what you're really trying to say is, look, how much risk is this organization taking on? If you're the audit committee, you have oversight responsibility. You, the auditor, tell us every time they get a set of questions, do they always find themselves on the more aggressive side? Now, I think there are ways to do that without reaching that tipping point, but I think you're right. I think that it's a very delicate place. I certainly understand why they do it. I think one of the things and why the discussion moves more towards emphasis paragraphs than it will towards original qualitative work is exactly for the reasons you described. And the emphasis paragraphs are really the notions of calling particularized attention to certain things you've already done. So it's not as though you're creating new qualitative assessments with respect to the organization, but you're merely making sure that as you're communicating to the capital markets, this is really important. So, but I think you're exactly right.
And I have one more question, if that's okay.
Sure.
With regards to the tax shelters, I'm actually learning about that in my partnerships class right now. And at that time, it seemed like the IRS was really starting to notice these shelters and kind of realize the lost revenue they were sustaining. Do you think, obviously the other big four were probably engaged in the same activities. Do you think that KPMG was made an example of, and do you think that that's fair?
I think this, look, it's never the right thing to say it's unfair that other people don't get punished as much or more for the exact same conduct if you know the conduct is wrong. So I guess, as a former federal judge, I have a very difficult time ever saying something was unfair. This was the wrongdoing. This was the punishment. That was not unfair. Does it become unfair because someone else didn't suffer the same? My answer is no. We've already assessed the fairness against that issue. So I guess I don't have, I think we're a lot of organizations, not other just big, accounting firms, but we're other organizations. But it was a pretty frisky time, as best as I could tell. I was out, I was on the bench for that 10-year period. So I was actually quite taken aback by how frisky a time it was. And by frisky, that means that people's abject disregard for being careful around standards. But that's not an explanation for fairness. I mean, I don't think. I mean, I understand the broader issue, but to me, it's not unfair if somebody does wrong and is sanctioned accordingly, whether someone else doesn't affect me.
Thank you.
Other questions?
So while KPMG is operating in various countries and is consulting for clients in different countries, at times there are ethical dilemmas where probably business interest would clash with what either the company's or KPMG's ethics are in terms of systems, etc. So what does KPMG stand on that, and how does it deal with those dilemmas when they come?
And how does it deal when maybe the values in different countries vary according to country versus?
Or probably, if I may say so, some systems might be more corrupt and less ethical.
Yeah.
And while companies are entering into that market, etc., there could be ethical dilemmas between business interests. And
I think that's a terrific question, and I think that people, as we go forward, every organization is going to be far more global in scope. And so every organization is going to face this exact question, is how do you bring about uniform sense of values when in fact both as a matter of culture and beliefs as well as practices in various countries, they don't conform to the same sets of values. We undertake with a series of global systems to be very specific around that, to actively interact with all of our network member firms through our global quality and risk management leadership. But it is a real challenge. It is a real challenge. Now, the Foreign Corrupt Practices Act places significant criminal penalties on organizations where your own employees are in fact the employees in the various different countries. We are a global network, so the people who actually are in other countries are not specifically our employees. We're members of a single network. As a result, the kinds of stiff criminal penalties don't apply to KPMG, but we still undertake to address the exact problem through an active creation of global values, active creation of compliance, active creation of risk management. But I think that's going to be an ongoing challenge for all global organizations, and it'll continue to have a great deal of tension in the system, I think.
thank you.
Okay, I have two questions as well, but my first one, I'll start off with the girl before me, or two girls before me. I did an internship as well with the Big Four company, and I'll be working there afterwards as an auditor, and the question, of course, is the value of my job is something that I've contemplated. And I understand people have said that auditors reduce the cost of capital for companies, or they provide that collateral bond. Mm-hmm. Do you kind of have that one thing that you think that makes the audit valuable you see in the future for companies?
I do. I mean, and in fact, I will say for several reasons that are very important. First of all, in public accounting, historically, and still true today, the brand of each public accounting firm is driven largely by its audit clients. Even though you may have a significant amount of other work in tax or advisory, but the audit piece continues to actually be the centerpiece of the public accounting firms. You know, our chairman, John Beemeyer, the Notre Dame graduate, and our deputy chairman are both auditors, notwithstanding the significant amount of advisory and tax work that we do. And that's because of the central role that audit has always played and we would look forward to going forward. As far as the work of audit, I think that it makes an invaluable contribution to ensuring the flow of capital. People have to believe that if they're prepared to invest in different companies, that they have a clear and full understanding of what the finances of that company are. So I look forward. There may be changes to how they audit to ensure that it continues to have value, but I view it as invaluable. Now, there are those in this debate who have said, well, if they didn't adequately, weren't properly, on the wall, protecting the economy during the economic crisis, maybe we should have no audits at all. Maybe just have a free-for-all. I view that argument as sort of an act of advocacy. It's really sort of, they don't really mean it. What they really mean is they're trying to make substantial changes in the audit. I think there will be changes in the audit. I think there are good reasons to coming out of the financial crisis. But I do think it will continue to be an absolutely vital part of our capital market system.
Right, that's true. That's also contingent on the auditors being the one to catch things. I mean, you see things like Enron and WorldCom and Sunbeam. It almost seems like the SEC are the auditors at some point. It's like the auditors aren't doing their job to their full extent, but I understand.
Look, I think, that's a very legitimate concern. And when you identify that there are audit failures, I think all too often you'll find that audit failures that are being identified publicly actually were self-reported by the auditors. But they're not going to be credited because the people you self-report to is the SEC. So you report to the SEC and then the SEC announces they've uncovered this problem. Well, the reason they uncovered it is because it was brought to them as part of our self-reporting responsibility. That's a fundamental responsibility that auditors have, is to ensure that if there's any possibility of wrongdoing, it's adequately investigated and remediated and fully reported. But that doesn't mean they're not doing their job. It just means they're not going to be credited with it in a public way.
Okay, that's good to know. And then my second question has to do with sustainability reporting. That's obviously a very big topic, and you've got a lot of GRI standards going on right now, and a lot of people are issuing sustainability reports. But then, of course, the question comes about, are they telling the truth? And so there's been some question, will Big Four auditors or companies be engaged in the future in auditing these sustainability reports, and will they be combined with the 10K?
Yeah, and the answer is yes. I mean, I think that it is a very important and growing area. And as I said, during my remarks, sometimes challenges result in opportunities. And I think this is one of those where there's a real opportunity because people want to know with some degree of reliability what the sustainability numbers are. And I think the public accounting firms are going to play a real role in being able to provide reliable information on it.
Great. Thank you, Sven.
All right. You're welcome.
Do we have another question? Well, I'd like to raise one. Very early part of your speech, you talked about the debt overhead or debt ceiling. And as any business student knows, a certain amount of debt is a good thing in an organization. But if we talk about the federal government, what we've noticed in recent history is that the answer is to always raise and then congratulate themselves on doing such a great job. I'd like to hear if you have an opinion on what is an acceptable debt level for our country and what should be the appropriate process as opposed to what is being done now.
Well, I guess I'm in the number that believes that when the Bowles-Simpson Commission came out with a very sweeping set of recommendations to deal with the debt, and the timing around which they did that it actually should have been seized upon as an opportunity. I do think that we're at a point where we have to deal with it head on. I don't see that, spending cuts alone without some forms of taxes, euphemistically described as revenue enhancements. I don't see that we're able to get our way out of it in that way, but I would have preferred that the President and the Congress go ahead to all the way to the most bold solutions, because otherwise we're going to have a long drag over a period of years, and it's not clear that even in the so-called out years that we're going to get control of it. I mean, one of the lines in Washington is they joke about how nobody's ever gotten to any out years. They don't know. Everyone talks about the out years. Well, who's ever gotten to an out year? Because the second you get to the next year, you talk about a new out year. And now, I do think this. I mean, I think that it's going to be tied up in this question about the effectiveness of our political process. But with this super committee that's working on what should be done right now, I think that's going to really, a lot of credibility of our political process is going to be tied up on whether they can come forward with something that really boldly and effectively deals with it, or merely creates something that will merely cause it to go out. So I'm cautiously optimistic, but I will tell you this, the group of us who are cautiously optimistic could meet in a phone booth. So. Any other questions?
Thank you very much. I want to give you a little something. We've had our first snow here in South Bend. I know all the students are excited about that. So we want to give you something to help keep you a little bit warmer for these upcoming months.
Oh, terrific. Thank you very much. Thank you.